Hey everyone, welcome once again to another episode of Team Russ Real Estate Updates. And this week we have a real nice treat for you because this week we have Brian Crane, the general manager and the founder of Intero Real Estate, here sitting here with me. And
one of many founders, but yes, happy to do it, Russ.
Thank you so much, Brian, for being here. And Brian has been in the business, obviously, way longer than I have been in the business. And I've learned many things from Brian. And I wanted to have today's episode with Brian in it because Brian has a wealth of knowledge. So we're just going to go over a few things that are going on in the market. And hopefully you'll find them useful.
Awesome. Bring it on, Russ.
Well, you know, Brian, we've had a very interesting year in real estate, to say the least.
Yes.
You know, from the beginning of the year when we had no inventory, no homes for sale, and buyers were literally jumping on the first thing that came on the market.
Right.
We've now crossed 2,000 units and are creeping up to 2,100 units in Santa Clara County. We haven't seen those levels since 2012.
Right.
The other two trends that we're seeing is obviously the interest rate. You know, we've gone from, 3.5, maybe low threes.
Yeah, interest rates have popped up a point and a half in the last year.
Which affects the buying power.
Yes.
So every point in interest rates affects the buying power significantly, you know, between 15 and 20%. And then finally, for the first time in a long time, we're actually seeing price adjustments for properties. So instead of actually properties selling 10-20% over asking, which is what sellers are used to seeing in the beginning of the year, we're now actually seeing homes adjusting their prices to move the inventory. So
Right.
with those three trends and ideas in mind, you know, what would you suggest? Let's cover buyers
Sure.
right now. What would you suggest that the buyers do in the market that we're seeing today? Are we headed towards more leverage for buyers, or should buyers not wait and jump on this opportunity and buy something now? What would be your suggestion to buyers?
There's a lot of things going on, Russ, with all that. And we've been in a 9-year run of a bullish real estate market, pretty much a 9-year run of a bullish stock market. A lot of that driven by lower interest rates. Certainly, though, demand in Silicon Valley remains strong, and the job economy remains strong. So there's a lot of fundamentals that are still in place
Right.
here in the Valley. And so I would not tell a buyer not to buy. The strategy that I would tell a buyer is that they have to have a 5-year outlook. If you don't have a 5-year outlook to purchase, then you probably would be better off renting. But if you got to live somewhere, and the prices in Silicon Valley, it's always going to be a wonderful place to live. So I don't think this is a bubble situation, and I think that if you can get yourself around a 5-year plan in this property you're buying, then it makes complete sense.
Makes sense.
More of a long-term play. The idea of buying and selling in a short term is much more difficult in a market that kind of has flattened out from an appreciation standpoint.
Yeah, makes sense. And you know, it's funny you say that because this year I've done quite a bit of travel, and every time, you know, I think, oh my God, real estate prices are so high in Silicon Valley. I go travel to, you know, Russia or to Asia, and then I come back here and I'm like, oh, now I understand why real estate prices are so high here.
Yeah, I mean, it's a phenomenal place to live. You know, any given day of the year is a beautiful weather, and we've got so many great amenities, and our roadways are beautiful. I mean, everything about the privilege we have of living in this area, it says that the market's going to continue. It's also the birthplace of technology, and that isn't changing. All the companies want to be here, and it's a phenomenal place. So in the long run, I'm bullish on real estate in Silicon Valley.
Great point. And you know, it's kind of like a lot of people are talking about the normalization, so to speak. It's like we've been in such a hot market for such a long time that you know, this adjustment, a lot of people in the marketplace are taking this, oh my God, the bubble is going to burst, here it is, you know, I'm gonna wait and see until prices go even further down. But you know, what would your advice be on that mindset? Would you say that, hey, you know, there's really no bubble here?
Well, I like your word normalization, and I think that's more about what's happening right now.
Yeah.
And put things in perspective, a couple of things to put in perspective. One is, in say 1992 or 1993, there were about 7,000 homes on the market in the same area. So we're a little over 2,000. We're adjusting, we're normalizing. And by the way, in that time frame, 92, 93, interest rates were at 8, 9, 10%.
Wow.
And so, you know, relatively speaking, there's still a phenomenal interest rate environment. The economy, the stock market continues to hit record highs. The job economy is still very, very prolific. All the companies are still hunting out engineers, high-paid engineers. My daughter happens to work for one of the high-tech companies, and she's in recruiting, and she has a full-time job looking for people to hire at the company she works at. So it's a booming economy here in Silicon Valley, and you know, with a 9-year run, you'd expect a little normalization, and that's I think what's happening.
So let's shift gears a little bit and talk about sellers. Right? Because you know, if you're working with a seller in the January and February, the conversation might have gone something like this: we're going to put your home on the market, and in a week we're going to set an offer deadline, and we're going to get 10 to 20 offers, and then we're going to pick the best offer.
Right.
You know, those kind of conversations are not happening anymore.
Well, unfortunately, they probably are still happening with some with some real estate agents and sellers. But the reality is, the truth of the matter is, the market has cooled off a little bit, and it's a supply and demand thing, just like any other market. And we've got an increase in supply, and quite frankly, a decline in demand. So that combination is causing prices to stop rising.
Right.
And so, you know, if you're a seller, I would tell you, you're not going to get the highest price in the neighborhood. You're most likely going to have to settle for something about 20% higher than it was this time last year. Does that make sense? I mean, it's still significantly higher than it was last year. It's just but it's less than it was at the peak.
In January and February and March and April.
I mean, I think we look back in April, May, it was the actual peak of this in the short run. We can look back and see, and that, you know, that, and prices in some markets are off 3 or 4 or 5 or 6%. Some markets even as much as 10% since then. And but if you look 1 year back, a full year, you're still up 15-20% in valuation.
Great information, and I think that, you know, with this information, hopefully you can be more educated on if you're a buyer, on how to act in the marketplace. I think one of the things definitely that's going to come back is offers that are contingent, and that's
no question. It's going to be easier for a buyer to buy. Motivated sellers are going to be more apt to listen to your offer. I wouldn't hesitate to write an offer at list price or lower. It always depends on how many other offers you're competing against. Some of the best neighborhoods and best houses are still receiving multiple offers, so that still could happen, and in that case you do have to step up. But I couldn't agree more. And then as a seller, you just know that you're still at a firm, solid price relative to the past.
Same time last year.
And it may not be an absolute peak, but you're still doing pretty well. And really the key is, where do you want to go? If you're a seller, what's your motivation? Why do you want to move? And if you want to catch it toward a good sweet spot, this is a good spot to be a seller.
Well, there you guys have it, from the master of real estate himself here in the flesh.
Yes.
Brian, thank you so much for being on this episode. And to everyone out there who is watching, if you have any questions about what we discussed today, please don't hesitate to leave a comment below or email us directly at teamrussrealestate@gmail.com. Thank you so much, and see you guys next
Thanks,
time.
everybody.